Hey folks, and welcome to this discussion of the results for structured trial number 3. Okay, so just go over the things that happened with this particular round. So if you take a look at the decisions we made, the first thing we did was to send some product from central Canada all the way over to eastern Canada. So we wanted to send some cannabis that we had in stock in central Canada, zip it over to eastern Canada so that we could use it in the production of edibles. Okay, so the best place to look for that right now, let's just go over to the inventory tab and we can see what transpired here. Okay, so if you look in central Canada, here's our first instance of what we call an intra-company sale. Okay, so intra meaning within the company. So we've taken those 10,000 units and shipped them over to Eastern Canada. And you'll see that we've actually turned around and used those 10,000 units in the production of edibles in Eastern Canada. So you can see we produced 10,000 edibles there, and those 10,000 units are used up. So you notice that if we send it by air, they can be used right away. So a couple of things that you can do if you send product by air to another region: you can use it in production right away. You could set a price and sell it on the consumer market right away. The only thing you can't do is you can't put it on a plane and then sell it to somebody else. Okay, because if you look in the manual, there's a diagram of all of the things that happen at once, and the first thing to happen is your plane leaves. So if you wanted to ship from central Canada to eastern Canada and then try to ship again by air, well, that plane has already taken off, so you would have missed your flight. Okay, you can, however, send it by surface to another person or another team so that it gets there at the end of the period. Okay, so you can see that happened, and we'll just go over this production of 10,000 units of edibles in Eastern Canada again. Okay, and in Eastern Canada. So you can see from the manufacturing cost analysis in plant 1 here, we've produced 10,000 units at a total cost of $55 per unit. So if you look at the variable cost of edibles in this case, I'm not doing a very good job of typing here, am I? Let's try this again here. Variable costs of edibles, they're made up of the component costs. Okay, so the cost of the cannabis that went in there, and that was $30 per unit, and then the finishing costs, okay, or whatever the heck you have to do to it to make it an edible. Put it into that gummy bear shape, I guess. So there's that $25, not $4.25, $25 per unit for a total variable cost of production of $55. Okay, having issues typing today. Okay, so that's where that thing is. So remember that number right on the left hand side before the dash represents the cost of the components. Okay, so those were used up at cost, which was the $30, which is exactly what we received them for from Central Canada. So you remember we sent them over at $30, and then we used them up at $30 in the production of cannabis. Okay, there is a way to set a higher transfer price. You probably noticed that on the production form that you could set a component transfer price. Okay, so if we wanted to say have that reflected as $40 a unit, we could do that on the production tab. And then what would happen is we just show a small profit on the sale of cannabis in the area, but our variable costs of edibles would go up in that case. Okay, so if we look at the income statement, we see the same sort of thing. We see an intra-company sale here of $300,000 and component sales here in Eastern Canada of $300,000 as well. Okay, a couple other things that we did. We sold some inventory. So we set a price for our cannabis and our edibles, and you'll see that we essentially exhausted our supply of goods in Central Canada. So the remaining 10,000 units, we set a price of $38. Those all sold. Same with the edibles. We set a price of $90. Those all sold. So we have nothing left in inventory in Central Canada at this point. Okay. So in the real game, we probably would have produced some extra stuff. So we had some stuff available. All right. So here's our income statement to take a look at how our sales went in those areas. So this one is in dollars, and you can see that we recorded a sale. Here's our gross margin. So that's our $90 less the whatever the cost of $42 per unit that it cost us to produce in Central Canada. Note that it was 55 over here. It looks like it was 42 here. So gross margin of $480. Now we got some extra expenses here that we'll see that we haven't seen yet. The first one is this commercial and admin, and that's essentially the selling costs that that are incurred. All right, so there's a per unit cost to sell to the consumer market. So the game has these little, what they're called manufacturing agents, and they run around inside the markets and they sell for you at a cost of whatever that works out to be. Looks like it's $1.50 a unit for edibles, and the same for cannabis. Okay, so those are these manufacturing agents go to work for you. The way to avoid that cost, of course, well, you're not avoiding the cost, you're just paying your own salespeople, is to open your own sales offices, and then you'd have your own salespeople doing that, and that cost is also recorded in the data log. Okay, so that's that. So that commercial and admin kind of lumps a bunch of things together in there. There's the cost of your sales offices if you open them. So there's a cost to open, then there's a cost to operate them per period. You'll also see those costs in the data log. Okay, but nothing there other than just the manufacturing agent costs. Okay, we also spent $20,000 on advertising in its traditional form. We use TV advertising in edibles. Okay, that's not a heck of a lot. You'll probably be spending more than that in the real game, but at least you know where it is now. That's a common mistake, is people forget the 000s there, and we had a couple of teams actually spend $20 million on advertising, which got a really strong brand, but you're probably out of cash for the rest of the game. So just be careful not to do that. And you see, here's our shipping costs that are reflected, and those are the shipping costs to send those 10,000 units from Central Canada, Eastern Canada. So note that the shipper pays for that. So it's the seller that pays the shipping costs always, and that's recorded in Central Canada. All right, you can see that we have total net operating earnings of minus $3 million. Not a big deal. The reason that it's so low is because our quantity sold is so low. Okay, so I think if we get our quantity up to where the capacities are, you might see that we'd be profitable in that area. I mean, the biggest loss right now is we're not covering off depreciation and fixed costs, and so knowing what you know now. With the variable costs, etc., you should be able to calculate things like the break-even quantity now and break-even price. So that would be a good exercise for you guys to go through before the real game starts. Okay. The last thing that we did is we insured $20 million worth of fixed assets and $1 million worth of inventory. So you'll just see that sort of all lumped there into that market research, insurance, and professional fees. A whole bunch of stuff linked in there. The insurance fees would be $250,000. So when you fill out the form, it tells you what the premiums are. I think it's 1% for your fixed assets and 5% for your inventory. So that makes up the $250. And remember, the amount that you insure is your decision. If you want to insure all of your assets, you can, up to a maximum of $90 million. But if you only want to insure a portion of it, that's fine too. Okay, so you really have to sort of set your own risk profile in terms of what you want to insure. So obviously, if you've got 100 million worth of greenhouses and factories, you probably don't want to insure all of them. Maybe half, maybe a quarter, whatever you're comfortable with. The chances of something happening to all of them at exactly the same time is really slim. Okay, so that is pretty much all that we did in period 3. Period 4, we're going to look at doing an inter-company sale. So you're going to send some stuff that you have left in Eastern Canada. You're going to send that to company 1. And we're going to do that by surface. Okay, and then we're also going to look at market research items. Okay, so there's a couple of market research items that you can take a look at. Okay, thanks for watching, and we'll catch up with you soon.